Hello, everyone, and welcome back to TradeFinder Live. It's great to be back with you all during this trading day and during trading hours. I'll be introducing Mr. Rob Roy here in just a few moments, but first and foremost, we do have to cover our disclosure disclaimer agreement. If you've attended any of our live events or webinars previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. Other than that, we had some unsettling news from Russia to start the morning. Markets seem to have overcome it, and I'm curious as to what Rob has to think and to say about that. And I'm very excited to interact with you all. So at this moment in time, I'll introduce the man of the hour, Mr. Rob Roy.
Hey, Zach. How are you? First of all, how you feeling? I know you've been a little under the weather to start the week. You sound a little stuffed up still. Hope you're feeling a little bit better.
A little bit better, yeah. I like to think I'm over the hill. Each day is progressively better.
You're far from over the hill. I can attest what over the hill feel like. But you were right on the comment regarding the overnight news from Russia and Ukraine. Seems like Russia is pretty upset about some missile things that we did. We won't go into too much detail there, but they're pretty angry about it and talking about how we seem to want to be escalating the potential war. I don't know if this is something that's occurring at the end of this administration before the new one comes in, because President-elect Trump has said that he doesn't really want to be involved in any wars that don't include the U.S., and that could change things. So maybe there's just some saber rattling going on here towards the end. It did shake up the futures as the start of the day. And if we go to the chart of the S&P, and then I switch back to the 3-minute chart in the intraday, you can see where we kind of gap down in the pre-market. That's in the blue shaded area before we open the market. And another cool feature about this software, if you hadn't heard me talk enough about this software, if you haven't by some chance gone to hub.com and gotten a copy of it, you can get after hours trading, pre-market hours trading. This is when the second comment came out from the one of the Russian ministers came out, and that we'd already been down in the futures, and then he made a further comment, and that moved things down. We gapped down. So we came to the upside here, filled that gap. That was all kind of normal, but then we've continued to move to the upside. And so, as Zach said, shaking that off. So if I go back here just a bit, so I'm going to bring this chart back out. There's the move that occurred when the first saber rattling stuff came out from Russia about the U.S. should be prepared for a nuclear war and all kinds of stuff coming from Putin. And then we kind of drifted back to the upside there, and then it was reiterated by another Russian official, and that's what brought us to the lows. And really, basically, right after the open have been the lows of the day. We have moved to the upside. So here's the live intraday Elliott wave, and that's again another cool feature of the software is not only do you get after hours trading and pre-market hours trading, you get live Elliott wave charts as well. So not just the after the daily charts, end of day charts, you get live charts. And we went to a wave 5 at about 32%. We've kind of gone sideways here. We'll see if we can make a move up to a forecasted potential wave 5 high. That would be a rally into the close. Maybe that happens, maybe it doesn't, but we've been consolidating here since basically lunchtime, 11:30. And we'll see how things finish out the day. But we have shaken off that concern at the early part of the trading day. So we moved to the upside following the election, the Trump bump, as you've heard it called, and then we're back down, and we're kind of consolidating here. We had a little bit of a gap down, so we had a gap up, and now we've had a gap down. We had this other gap down here, so we got island reversals all over the place. And I've had a few questions from subscribers on with this gap down, are we going to have a island reversal to the downside? And at this point in time, I think we're just consolidating this move that got out of control. Some of you on U.S. Market Update kind of threw some shade on my rule that no security in any time frame gets very far from the 10-day moving average. And nope, that rule worked again. It doesn't happen. I'm telling you, we can get overbought or oversold for short periods of time, but it doesn't last for long. Anything that goes too far from the 10-day moving average is either going to consolidate and let the 10-day moving average catch up, or it's going to retrace back down to it, which is what happened in this case. One of those two things is going to happen. You can put that in the bank. That is a really good rule. We've had a lot of subscribers at evotrader.com that have said that one nugget has been worth their subscription, and they've continued to use that in their own trading moving forward. So we'll see. We're in this potential ending diagonal here, and some have said, well, why are you still calling it an ending diagonal? Couldn't it be a starting diagonal, beginning diagonal? And anything is possible. We relabeled to a wave 3, but I want to be clear that I'm not saying that the ending diagonal is imminent, that we're going to correct. If it is still an ending diagonal, which I think it still could be, we would have to create the wave 4, and that would be followed by another wave 5 to the upside, which would make sense moving into the end of the year because it's notoriously a bullish time of the year for the market. And then once we get to the wave 5 high, which should be up around 610 or so based on the Elliott wave forecast, then maybe at the beginning of the year we see that correction following the ending diagonal. So it's important to understand the rules and be really clear on what I'm talking about. I'm not saying that because we're currently in a wave 3 and that we still could be forming the ending diagonal that it happens now. Just saying that this still could be the formation of one. We've had so many zigzags, and yes, the wave 5 patterns break into 3 wave segments. That's all Elliott wave. So those of you that have that are spot on. And we come down. Maybe we come all the way down to this lower trend line on the wave 4 before moving up to wave 5. Maybe we label it at some point here, but it would mean that we still have a wave 4 to complete and then a wave 5 to complete. And at that point in time, if we stay along this same track where we are consolidating here with these trend lines and we stay within this realm and move up to that wave 5 target, yeah, I still think it could be an ending diagonal. So I just wanted to try to be really clear on that since there seems to be some, and I know how human psychology is. Half the time we hear what we want to hear, and then other half of the time we don't fully listen to what's being talked about. So anyway, that's where I think we could be on the S&P. Let's take a look at the VIX, and we did have a bit of a tick up on the VIX earlier, but we're back down now with the calming of the market, and we had gotten up right up to the 50-day moving average, and then we backed off, as you can see. So trading around 16 or so at the time, and we'll see if we still hold the 15 level. I really thought this could be what brings us up to fill this gap. Some of you noted, and I thought that was really good commentary on the U.S. Market update, the fact that we see the VIX fill its gaps. We've talked about it. We have the AI data that shows 94% of gaps get filled. It's not 100%, but it's pretty darn high. And a lot of you commented that gaps in the VIX get filled, or some of you did. And I think that was very astute. And it looked like maybe that's where we were going today with that news and the way the futures were acting. And then we reversed. So maybe we just kind of have a little bit of extra volatility over the next few trading days, and that eventually gets us up to fill this gap. We'll have to wait and see, but I thought that was really interesting. And then if we go and take a look at the DIA, and we'll get to the bond market here in a moment, you can see that down to the 30-day moving average, which, as you know, if you've been listening, is not what I consider much of a support resistance level. It's because of the 1030 crosses. That's why the 30-day moving average is on my charts. The lime green line is the 10-day. We're still below it on the Dow, so slightly underperforming what's going on with the S&P. There's the 50-day moving average, but we are up on the Dow for where we were at the open, but not up on the day. So let's take a look at the Qs, and they're doing better. SMCI came out with some pretty good news. NVIDIA is doing well. So those two are propelling the Qs. They are up on the day, but still below the 10-day moving average. So we need to break above that level. And then watch out if we can get above 510. But there's still challenges. I said that I would be surprised if that zigzag pattern completed. It did, with interest rates being higher. And now we have the Federal Reserve saying that they may not cut as much as the market had anticipated, with the potential of the tariffs, importing inflation, et cetera. You've heard those rhetorics over and over again. So we'll see. But for now, I think you're kind of on a wait and see mode on the Qs. We did go up. We did complete the zigzag. We've pulled back a bit. We're still below the 10-day moving average. I don't think you can go long when you're below the 10-day moving average. And I think a more prudent move would be to wait and see if we can break above this 510 level. If we can get back above 510, then yeah, I think all signs are clear for the Qs. We got to get there first. And then the IWM, we're getting awfully close. I got this one really right. I felt like we would be the IWM would be the first one to come down and lead the retracement back from the post-election bump, and that we would likely come down and test that 525 level. It was resistance for so long, and when you have something that's resistance for that long, it at least gets tested to see if it is going to be support. We don't even know for sure it's going to hold its support, but it should come down and test it, and we got awfully close to that on the low of the day. In fact, if I come over here and bring in the crosshair, I can tell you exactly where we were on the low, 226. So that's pretty darn close to 225. I still think the 225 level will likely get touched on its own, but that's pretty close. And so, yep, that one got very spot on what would likely happen there on the IWM. So now let's take a look at the bond market with TLT. So if we take a look here, we're getting a little bit of a bid in bonds today, which is nice to see, because if you've been following me, you know that I've been saying that I don't understand what's going on with the bond market. The bond market and the equities market are not agreeing. That 5-wave pattern was disqualified. That's why I turned off the Elliott wave indicator, because at an 89% correction, that's violates the rule. 78.6 is as far as you can go in the Elliott wave pattern. And we came down here. We've been hovering around this 100% extension, which was an extended C wave at call it the 38.2% fib level. 61.8 is your first level. 100% is your extended level. And then we've bounced back up. And so we're trading here just above the 10-day moving average on bonds. So a little bit of a bid today. So prices going up, that means yields and rates are coming down. And that could be positive for the Qs in the tech sector. A little interesting. Why? Maybe because of the concern on what's going on globally with the war, et cetera. Maybe that's what's put a bid in bonds today. Let's see if it can hold. I don't think it's meaningful unless, one, we can hold above and close above the 10-day moving average today and then get follow through tomorrow. If so, then maybe we're going to come up to the 50-day moving average. That should be supportive of the market, and I would submit that's why that we have recovered in the equities market from the lows of the morning, is the fact that we are getting a bid in the bond market. Taking a look at the dollar, which has calmed down a little bit as well, which was much needed, in my opinion. I've still been completely blown away by this move in the dollar. To move that far, that fast, is highly unusual in the dollar. Doesn't mean it can't happen, obviously, because it did. And then you can see that we got above the 61.8% level. We didn't even make it to the 30% level on the retracement of the B wave. And if Elliott were here, he would tell you that he's not so sure that's actually a B wave. He really wanted it to get to 30%. We got close. We didn't quite make it. And so he would be suspect, I believe if he was here and talking to us, that this is all one big impulsive move. So this is all one big A wave move, which would mean we should have a further correction down. So he wouldn't really count this little move lower here as a correction, just a little bit of a blip in an overall impulse wave to the upside. So we'll see how that plays out. But I'm sure that would be his commentary if he was here with us. All right, so now let's go and look at gold, which has had a little bit of follow through from its move up yesterday. Now, this again, we've been talking about. Gold has just been really oversold since the election. The threat of further inflation, maybe the Fed not cutting as much. Both of those were double whammies to the metals market. But we got oversold. And now we've had a nice little bounce back to the upside here. And we are above the 10-day moving average at the moment. But you can see we're bumping our head against the 50-day. So can we get above those and get a further bid in gold? Maybe. And maybe it's the fear-mongering out of the Russia-Ukraine situation that's creating a follow-through in the bid in GLD. But nonetheless, it is. If we take a look at SLV, not quite the same bounce as we have in gold. And we've been talking about whether or not silver could regain the headlines and take over as the big brother rather than little brother to the gold and silver movement. But it's not moving quite as much as gold is today, still hovering above the 10-day moving average, not quite to the 50-day moving average, but yet slight follow through from the bounce of yesterday, but not quite the moves that we've seen in gold occurring in silver, which you wonder, is that something to do with the tech sector? The techs are doing okay today. You would think maybe there's a little bit more to the upside in SLV. But for now, we look at this retracement from the ending of the C wave. So we had a 50% B wave correction that yields a 100% C wave extension. That happened. If that zigzag is over, you retrace the C wave. That also happened. So that zigzag pattern was absolutely spot on. Everything that was supposed to happen happened. We had a symmetrical triangle right at the 100% extension. The breakout was to the downside, and it retraced the C wave. Looking at the LE wave corrective patterns, they couldn't have been more spot on with silver. So what do you do now? Now you have to wait and see. You got to let it tell you what's the new pattern. And it hasn't had enough data yet to give us a new pattern. We did the correction. We corrected the move from the end of the C down to the beginning of the C. That's happened. But now we have to wait and see where the new move is going to be. So I believe if you're trading the metals, you're just kind of sitting on your hands, waiting for the appropriate entry signals to go ahead and get in. Let's take a look at USO, and we're just, I don't know what's going to happen in oil. I feel like I've been saying that for a few months now. We are in this symmetrical triangle, and if you've heard any of the recent webinars, been talking about how, the old drill, baby, drill, that the Trump administration is in favor of, creating more domestic production, and that would add to supply on the market, which you would think would bring prices down. But OPEC is, I believe them, pretty steadfast in the fact that they want to keep prices elevated. And so I think, just from an opinion standpoint, that they will reduce production to meet the increased U.S. production next year. And that should keep things in a trading range. So even though we're in this triangle, we're going to break out of this triangle, but do we break out above 77.5, or does that become resistance? If we break to the downside, do we break below 67.5, or does that become support? I think the answer to those questions are both yes. So if we break either direction, I think there's a high likelihood that we stay in a big trading range. And I think some sort of a butterfly, iron condor, something along those lines, a big pattern between 67.5 and 77.5 makes a lot of sense with the price of oil moving forward. I think it's going to be range bound. Of course, I could be wrong, but that I think made a pretty good case for it. UNG. So let's take a look at natural gas. We're getting a little bit of a bid. There's the first snowstorm of the year up north, and maybe, just maybe, we're going to get a continued bid here. We are kind of having some trouble here at the 50-day moving average. You can see we traded above it, but we haven't closed above it yet, and we're right on it at this moment, right at the 50-day moving average. So you can see that's where we are currently trading. And so can we get back above 15? That's what needs to happen. Also, same thing on this zigzag pattern. 38.2% B wave correction yields a 61.8% extension. We went down there at the beginning of November. We've been trading around that area, and we gapped up. We've come back, basically filled that gap. Another one that I think is in a trading range between 12 and 15 until we can break out of it. The zigzag pattern did exactly what it was supposed to do. And now we just have to wait and see. So kind of along the lines of oil, same thing here with natural gas. Let's take a look at the cryptos, because that's where the action is today. Look at what's going on with Bitcoin. We're over 93,000. We're in the tractor beam, in my opinion. You know, that's one of the analogies that I like to use. It's a nod to my dad, who watched Star Trek religiously when I was growing up, and the old tractor beam effect is the big round numbers. Is the analogy that I use. They just tend to draw whatever security it is towards them. And being over 93,000 on Bitcoin, 100,000 is just not that far away. Maybe it doesn't happen within the next few days, but it could. But I do think in the not too distant future, we're going to see 100,000 on Bitcoin, and then we'll see if we get a little bit of a pause. But up till that point, I think that's where we're going with Bitcoin. Ethereum is up, but consolidating. Now, I want you to look at this chart of Ethereum, because you can see that we have the vertical move up following the election, and all the crypto people excited about having a pro-crypto administration, not just President Trump, but the cabinet members that he's hiring, et cetera. They're all pro-crypto. And so you can see that we had that move to the upside with a symmetrical triangle. Now I'm going to switch over to Solana and look at what's happening with Solana. And we had that vertical move up, symmetrical triangle, and we broke out to the upside. And we're at 242 now in Solana. So let's go back now to Ethereum. Remember that pattern and look at where we are with Ethereum. Doesn't it look pretty similar? Is it going to break out the same way? Maybe. It doesn't have to. I'm not trying to say because Solana broke to the upside, this one will too. Ethereum could break to the downside. But the patterns are very similar. And Ethereum is trailing Solana right now. And perhaps it does play catch up and break to the upside. But I'm not trying to say that's what's going to happen. When you have this pattern, you have to respect that it could move either direction. But a lot of action, a lot of commentary in the whole crypto world post-election, no question about that. So we talk about NVIDIA. I figured you'd be asking about it. By the way, before I leave crypto, let me show you my strategy. Aggravating because the post-election move exited a position for myself on MicroStrategy. So I'm just trying to be honest with you guys. I'm far from perfect. And we had this big move up and then consolidating, and I wanted a little bit more of a pullback and didn't get it. And I've been waiting to re-enter MicroStrategy, which is so heavily leveraged against Bitcoin right now, and completely have missed these last 3 days on this move to the upside. Pretty frustrating, but can't chase this vertical stuff. Who knows how far it goes on MicroStrategy, but caught the first big move and then missed the next one, and hoping that perhaps we get a little bit of a move back down in consolidation, but it may not happen. But our case study consideration that we're going to have for today is an ulterior to that, which I'll talk about a little bit later on. I do want to go to NVIDIA earnings tomorrow. So obviously, all eyes will be on what happens with NVIDIA. So what does it look like heading into the earnings report? Consolidating right here at 140. I think that makes a lot of sense. There was some commentary in the U.S. market update, and if you haven't watched it yet, it was a good one. A lot of good comments of the fact that NVIDIA going into the Dow, is that going to be the kiss of death? Probably from a momentum standpoint. It's what normally happens. Doesn't mean that the stock doesn't continue to go up. It means that these crazy momentum phases, which were already hurt a little bit with the stock split, but slow down even further because the big money has to buy it. And then that takes a number of buyers out, so you don't get the big momentum moves anymore. But we're just kind of consolidating here right around the 10-day moving average, right above this 140 level, which came up, was resistance, tested it, moved higher, got to 150, came back, tested 140 again, and we're trading right here around the 10-day moving average as we head into earnings tomorrow, and we'll see how that plays out. Then Netflix, Zach, you and I have had conversations about that. Obviously, people have just given them a pass on all of the streaming issues that they had. Over 60 million people viewed it. That's been the positive, but they certainly had some problems. A few more people than what they expected to be live streaming all at once, and caused a few freezes of the screen and some pixelated pictures, etc. But they're taking it as we made it happen. We pulled it off, and the market is giving them kudos for that. And so Netflix just continues to move higher. 866, we're not quite in the tractor beam yet to go to 1,000, but we might be getting there. We'll have to wait and see. But I do want to show you this on Netflix. As we broke out of this triangle, we did move into a zigzag pattern. Look at that, right at the 38.2% level. Now that gives you a 61.8% extension, the expectation, which is exactly where we are right now. So right now at this moment, we're at the 61.8% extension. Then the question becomes, does this become an extended C wave? Does that C go up to the 100% extension, which is right around 900? And that's where I like to look at the confirming indicator, specifically the DMI, to see what's the likelihood. How strong is this move? Is this a very strong move to the C wave extension, or does that move seem to be running out of gas? Well, as you can see from the DMI, if you're familiar with it, and we have lots of education on our website at ewotrader.com about the confirming indicators that I like to look at, that's about as good of a DMI setup as you could have. We have the ADX moving up. It's well above both 20 and 25, depending on whether you're more aggressive or conservative on your assessment of the DMI. I tend to be a bit more aggressive. We have the positive directional indicator moving up, the negative moving down. Looks great there. So I would say the DMI is telling us there is a high likelihood that we are going to see Netflix go up to that 100% extension. So likely to see Netflix hit 900. I think that is well within reach at this point in time. So thought I would go ahead and show those. Did want to show a little bit on the international stuff. We'll go to FXI, which was one of our case study considerations here in TradeFinder. And I've kind of drawn this, I call this the arrow. When you have a symmetrical triangle where you have a lot of consolidation right through the middle, the arrowhead, you pull it back here and you can see kind of that design. We got down to the bottom end, and certainly the China trade took a little bit of a hit with the Trump victory because he's going to put tariffs on them. Little doubt about that. So it took some of that momentum out. There was a little bit of a break to the upside. I think that was an anticipation of what could happen if there was a win by the Democrats. But since it didn't play out that way, moved back down. But we are holding this lower trend line. But to see a breakout to the upside on China, we've got to get above this midpoint here, right around 31.5. So that's what you need to see on the FXI, but it's not enough for us to warrant taking off that case study consideration as a potential trade. We'll see. It hasn't gone down and failed yet because it's still within this triangle. It got awfully close. We tried to break out, but then we didn't have a follow through day. Another one of the rules. And we've held in here. So we'll keep an eye on it. It is definitely a tougher road to hoe for the China stuff with the Trump win and the potential tariffs. Maybe he doesn't put as high a tariffs as he talked about, and that could put a bid underneath it. We'll have to wait and see. But for now, it's not bad enough to actually go through and close the position out. So let's take a look at Boeing. We'll see what Boeing looks like, and I haven't visited that one in a while. We did get past the strike. Thought maybe we might get a little bit more of a bounce. We didn't. Held in here at this lower trend area around 135 and just kind of going sideways here. Not much happening. At least Boeing as a company, I'm sure, is happy to be out of the news. It seemed incessantly in the news day after day after day. So I'm sure they're happy with that. And we'll see if on UNG we continue higher there as well. So that kind of gets us through what I wanted to talk about. We are going to look at the INDA because once again we nailed that one. We've been really spot on here. When we were going sideways at 55, or excuse me, at 57, we said if we broke that, we'd go down to 55. And then we went sideways. If we broke down, we're going to 53. And that's exactly what happened. We came right down to 53. And this isn't an area that could hold on the INDA because that wave 5 was so extended. You're not looking for a move back to the previous 4. You're looking for a 61.8% corrective move, which is exactly where we are right now. So this was a logical place that we could find some support on the INDA. So let's see if that holds and we continue to bounce back to the upside or perhaps a little more consolidation. You can see currently we are jumping back up to the 10-day moving average after being just slightly oversold away from it. But we'll see what happens with that. I think right now the prudent move is once again, wait and see what happens with the INDA. Let's see if it gives us a little bit more of a bounce before you could consider the next phase. Jeffrey Gundlach, the bond guy, said he likes both China and India in an international standpoint, but I pay way more attention to what he has to say regarding bonds than I do equities. Just thought I'd pass it along, but for now, I think the prudent thing to do is just to be a little bit on the conservative side. So I'm just going to give you a little bit of a teaser. We are going to look at MARA, and that came from our Hub Financial crypto show. I know a lot of you are very used to going to the Elliott Wave Options channel. We appreciate your viewership each and every week very much for the U.S. market updates, etc. But we also do a show every week on the Hub Financial channel on YouTube with all things crypto. So if you are interested in the crypto world, which is certainly back in the forefront again, I invite you to go to the Hub Financial channel on YouTube, subscribe there, and when those recordings, we record one each week, are posted, you'll be notified. And so really good information on what occurs. You saw, if you watch the U.S. market update on the Elliott Wave Options channel, you saw Brandon Burton. He's the guy we go to for our crypto information, knows a bit more about it than I do. When you're weak on something, best thing to do is find someone that knows more than you. And so that's what we do. And so we do a show on the Hub Financial channel on YouTube each and every week. So I invite you to join that. That's where you can find more information. A lot of you made very positive comments about his appearance on the U.S. market update. So we were talking about this in the show this week on MARA and the potential for it to move higher because they are taking a page out of the MicroStrategy book. They're following along with what Michael Saylor did. Now, you may be familiar with Mara as they are a crypto miner. So they're already in that space. Not that MicroStrategy was before. They started basically leveraging the entire company against Bitcoin. But Mara is going to start taking a page out of that. We've looked, and some of you have asked about CleanSpark in the past, which is another miner, which is a very well-run company. But the reason that Mara is taking some headlines now is because of their outspokenness on the fact that they are going to follow along with the MicroStrategy model, and a little bit further pullback here on Mara than we had with CleanSpark. And so perhaps that is a pretty good entry, and that is going to be our case study consideration for this week. We're going to look for it to go up to 25. So that's a little bit of a teaser ahead of time. Zach will be back in a few minutes to show you how to post an idea. One of the another great features of the software is the social media aspect. It's gaining more and more traction, which is so exciting to read all the comments. People can go in and vote on your own thoughts. It's a voice. It's a platform for you to express your voices and opinions. And it's done. Everybody's very respectful, which I like. Because we all have differing opinions. That's what makes markets. So it's not a bad thing that somebody disagrees with you. It's always nice to hear opposing opinions and their reasoning as for why they have an opposing opinion. And it would be nice if we could get back to that in the world of our political system without so much hate going on back and forth. The parties are so far apart now. Anyway, just, life's too short. Just be nice to each other. All right, Zach, let's move that over to the Q&A, and then we will come back after a few questions and post that MARA case study.
Sounds like a plan to me, Rob. Let's start out with a couple symbols here from IRV85. First one's going to be AMD.
Yeah, and somebody asked about that on the U.S. market update this week, and I promised to include it, so it will be in the next update. But for now, we are bouncing a little bit, and I think we'll see what happens with NVIDIA tomorrow. But for now, we are kind of in no man's land on AMD, and the reason for that, I'll just use this arrow that's already here, the B wave, roughly to the 61.8% extension. Our retracement gives you a 100% extension. So we went there, then we retraced back to the previous fib level. That's what normally happens if you're going to have a further extended C wave, and the next level would be down to 161.8. It looked like that was underway, and then we've gotten a little bit of a bounce back to the upside. Now, can't get excited about that yet because we're still below the 10-day moving average. And to feel like that move is out of the question, we would have to get back above both the 10-day moving average and the 100% extension. So we need a little more work back to the upside on AMD before we can feel like we're out of the woods to potentially go lower to the 161.8. So in this area between the 100% and 161.8%, that's the no man's land that I was talking about. So I feel like we need to just kind of wait and see on AMD as well. Seems like that's been kind of the theme here, is after the big post-election move and some consolidation, there's a lot of charts that we're looking at that need to have some patience for the next pattern reveal as well. All right, next one, Zach.
Thanks, Rob. Next one's going to be Meta, META.
Oh,
over there, Mr. Zach.
Yeah, we haven't looked at Meta in a while, and it didn't have the same post-election bump, as I'm sure everyone can figure out why. It was probably the exact opposite. In fact, I was a bit surprised that Meta didn't go down further based on the election results. We did break below the 575 level, so that was support. And if we broke below that, we said we'd come down to 550. That's where we are now. can that hold is the question. We're right at a 30% extension on the wave 4. The algorithm still has that wave 4 in green, which means the algorithm is not convinced that's the end of the wave 4, meaning that we could potentially go lower. We are trying to hold 550. If we can bounce back above the 50-day moving average and the 10-day moving average, then perhaps we are done with the wave 4 and can look for a retracement back to the upside. But for now, we have to at least be wary that 550 may not hold. It is for now, but that's your key. So if you're watching Meta, you got to keep an eye on 550. If we can bounce from here, but I would submit to you that, once again, caution or patience would be the prudent thing to do. And I don't think I would go long Meta unless we got back above 575. If we do, then we're probably coming back up here to test 600. I think that would be extremely likely. But for me, I would be watching this one and look for a break above 575 or a break below 550. Those are your two entry points, depending on which way it goes. For now, it's just in consolidation mode.
Thanks, Rob. We're going to head over to DIS for Trade Simple.
Other one we haven't looked at in a while, good old Walt. I think I have mentioned before, it kind of tells my age. I actually, as a young child, went to Disney World the very first week it opened. My parents took me. So native Floridian, kind of a cool little thing. Taking a look here at Disney, the reason for this big bounce, I think it's doing a little bit of a piggyback off Netflix from the streaming, but they reported good streaming numbers on their own right. So this is not just a purely, follow the leader with Netflix. Their numbers were good from a streaming standpoint as well. And so that brought Disney up. Now we got a bit overbought. So now we're in that scenario of, do we consolidate sideways and let the 10-day moving average catch up? Or do we kind of do a combination and back up a little bit to the 10-day moving average? A little bit of a backup today, nothing too significant, but we'll have to watch and see when we come down here. I'm sure the question is regarding, are we going to fill this gap now? Hard to know that. We do know that gaps get filled, and we talked about that earlier in the show. But now, or will it be sometime down the road? I think that what we need to do is watch this 110 level because that was the low of the post-earnings day, and that seems to be where the market drew the line in the sand. So we'll draw a line there as well. Watch that 110 level. If we can hold there, perhaps we get a bounce and continue this wave 3. Once again, the algorithm, by having that green, means it's active, where the purple color means it's confirmed to be complete. We could go even higher here. So the algorithm is not sure that was the end of the wave 3. So let's watch this 110 level. If we hold here and bounce, then likely more upside to go. If we break below 110, then we do have to be aware or cognizant that maybe we are coming down to fill this gap. The only time I'd be really concerned about Disney would be a break below 100. I just don't see that happening. So I think we keep an eye on 110, see how that plays out for now.
Thanks, Rob. Excuse me. Next up, we have one from Bruce here on SMLR.
That's not where I thought we were going. I thought we were going to SMCI, which people are, faked me out a little bit there. With SMLR, been in the news a bit, so a big move to the upside here. And I kind of like this, so there we go. Same thing we talk about all the time. Got too far overbought, too far away from the 10-day moving average. We're right back down to it. We held it on the low. We open right there, and now we're trading above it. I think this looks poised to continue its move higher from here once again. Even on this corrective move down, the algorithm did not say that that was the end of the wave 3. So there's potential to continue to move higher here. And I think that we watch that one. Now, where would the risk be? The stop, I think, would be if we break 40. So as long as we stay above 40 on SMLR, I think you can stay long. I think if you're looking for an entry, you could take advantage of it now. But note that a break below 40 is your stop. You'd be out at that point. But for now, I like the consolidation pattern, and I think it wants to go higher.
Very well. Maria would like your thoughts on GD stock in the next couple of months.
GD?
GD, General Dynamics.
Yep. All the defense stuff took a hit as Trump is not anti-military by any way, shape, or form, but he's anti-war. So all these companies and affiliates, you can see what happened here. And we broke below this. We didn't quite make it to the C wave extension. And the fact that we've broken this means that that's a failed zigzag pattern. Doesn't happen often, but there's one. So we take that off and we broke below 300. The next level of support you can see is at the bottom of this tap box, which is around 280. We're at 283 right now, so that's not very far away. But on the other side of the things, we are getting a little bit oversold. So you can see how close we are. I think if you wanted to try to get a reflex bounce, and I just want to be very clear, I'm not saying you want to go long General Dynamics, but if you're looking for an oversold bounce, I think you could do worse than this. And just as a reminder, when the stocks get overbought or oversold from the 10-day moving average, I try to emphasize this as much as I can because I talk about that 10% or that 10-day moving average rule so often. These are 1 or 2 day bounces. They're not very long, 3 days or less. So this doesn't mean, okay, we're oversold, go long for 2 weeks. That's not what I mean by that. You get a reflex bounce oftentimes back to the upside or the downside, depending, but it's very short lived. It's only a day or two. I'll oftentimes just take 1 day and not even wait around for the second day, even if it hasn't made it back to the 10-day moving average, because you can get a nice return quickly. So I think we're at a point now where you could kind of give that a shot. Obviously, your stop is at 280. If we break 280, you're out. So from a risk to reward standpoint, looking for a short-term reflex bounce here, I think this makes sense on General Dynamics. But again, we break 280, you're out. So you've only got 3 points of risk there. And you've got potential 10 points of move to the upside. So from a risk to reward standpoint, that looks pretty good.
Thanks, Rob. For JJR, let's go over to SONY, SONY.
They need to bring out another Spider-Man movie. Going back to my childhood, I was and Zach knows this about me. A lot of people that know me know that I'm a creature of habit. When I was growing up as a kid, I was Spider-Man for Halloween every year. There was no variation. Spider-Man, that was it.
Spider-Man slowly morphed into Chuck.
Yeah, exactly. Well, nobody ever said that I looked like Spider-Man. It's just everybody seems to think that I look like Chuck Norris. So that's it's unreal how often I hear that too. It's mind-boggling. But down here at 17.5 with support, we held there on SONY. I do think that this is quite interesting. So whoever asked the question, I think you might be on to something here based on what's going on with Netflix, based on what's going on with Disney. I think that we might have a chance on this move. We tried it once and it got turned back rather quickly of breaking above this 19 area that was resistance. So the problem was it went too far too fast. And that's why I've talked about how I much prefer the 45-degree angles. So look at what's going on here. So we had this vertical move right here. That didn't work. And so we got turned back. But now look what's happening. Now we have this 45-degree angle move. And I think that makes a lot more sense. We're above the major moving averages. We've got a positive 1030 cross. Now, this is one of those times where I haven't done it much lately because the way the market's been. But when you talk about these upward moves, I try to give an aggressive and a conservative view. We all have our own risk tolerances. You know where your own personal ones lie. I think if you're very aggressive minded, you could take a shot at SONY now. If you're more conservative minded, let it break this resistance line. Let it get above a little over 19. What would that be? 19 and a half? Not quite, not almost 19 and a half. If it traded to 19 and a half, you could get in. So that would be a more conservative entry. So the aggressive move is I think you could take a shot now as it maybe rides the coattails of Netflix and Disney, et cetera. But again, if you're more conservative minded, not quite as high risk tolerance, then let it break that 19 level, get to 19 and a half, and then enter. But I think that looks pretty intriguing, SONY, especially with everything that's going on. I haven't looked at that stock in a while, so good on you for asking about that. So we'll do a couple more, Zach, and then we'll let you show them how to enter an idea.
Sounds great. I was going to say, that was a good spot by JJR. Second question symbol is TTWO, take two.
Oh, so this is an entertainment guru here. This kind of takes me back to the whole bond market thing. The bond market not agreeing with the equities market. They still don't agree, even though we're having a little better day today. There's a bid in bonds today, rates coming back down, but the damage has been done with higher rates for so long, indicating a recession. Maybe we do get one after the beginning of the year as tariffs and everything else go into play. Maybe that does happen. Don't get mad at me if you're very pro the new administration. It takes time to put these things into place, and we're setting the stage. Definitely viewed as a more pro-growth administration than what we've had, but things can't change overnight, and sometimes a little bit of pain has to be had to turn things around and get it right. And so, if we do go into a recession, then I think stocks like Netflix, which are already going ahead, Disney on the streaming, maybe SONY, and then Take-Two, video games. I think the case is the same for all of these. So I think you're seeing a consistent theme here among these entertainment stocks that, the staycation thing, et cetera. If we do slow down the economy, if the Fed's not going to cut rates as fast because they do want to wait and see what effects the tariffs are going to have on inflation, et cetera, I think this makes sense too. And that is a great looking chart in that wave 3. I do want to bring the DMI in on this one. Now, the only issue here, and we are getting a continuation of this run. You can see we consolidated there and took off again today. The positive directional indicator and the negative directional indicator are both giving confirmation of today's move, as is the ADX. The problem is the ADX is getting really high. And it's getting to the point almost into the nosebleed section. I call 60 the nosebleed section on the ADX. You could continue to move higher here, but I think you just have to be cautious of that. So keep your stops kind of tight on this one. I do think it has the setup to go higher, but not tremendously higher. So where are we? 184. Almost into the tractor beam area here. So could we see Take-Two hit 200? Yeah, I think we could. And if we do hit 200, based on where that DMI is, maybe that's the short-term high for a while, and maybe we bump our heads there. But it seems like with this move and a constructive, at least DMI, maybe 200 is where we're headed on Take-Two. So I like that one. 200, I would be very cautious, though.
Thanks, Rob. Excuse me. Sorry. And sorry to all of our listeners out there still dealing with clearing up this voice. So I hope it's not too harsh to listen to. We'll finish up with this last symbol, and I'll head over to the platform to show everyone how to post the idea. Mr. Ponzi would like to know how FNGD would look on Elliott Wave. I believe that's a Canadian index, if I'm not mistaken.
FNGD. It's a Canadian bank, Bank of Montreal. And, with what's occurred with the Trump administration and just understand that financials tend to do better when rates are lower. And if the Fed is saying they're not going to cut rates, I get this is Canada, but we follow each other pretty closely, and the fact that perhaps the Fed is not going to be as aggressive, I think that's a pretty fair statement. Even if they do continue to cut rates, I think it's likely they're not going to cut. They've even said that as aggressively as maybe the market once thought. And that has brought down the financial stocks across the board, with the fact that rates could be a little higher for longer. And with all that, this is problematic. I'm going to take the DMI off because it looks ugly, but I don't look at the DMI as much on downward moves as I do upward moves, because especially the ADX is viewed as being a little bit of a lagging indicator. So I tend to look at the CCI on downward stuff because it's more responsive day to day. And you can see that we've gotten up here. We didn't quite make it back to the zero line and then rolled over. Notice what happened last time we got up there and it rolled over. So this looks problematic to me right now with where we are on Bank of Montreal. And there will be a point where the lack of rate cuts is priced in. And, of course, whatever policies are enacted up north will be viable as well. It's a shame that it's going down on a day when our bond market at least has a bid. But yeah, this one's a little nerve-wracking. We don't have a 5-wave pattern. We did have a really good zigzag. Let's see what that may tell us. Maybe we're nearing the end of it. Let's see what that looks like. So taking a look here, 50% correction. So we're not quite to the 100% extension yet, but we're awfully close. 15. I think you have to be wary of the stock hitting 15 and completing that zigzag, but perhaps that does hold its support. So we're getting in an area here where maybe we can find a bit of support. That would make sense. The market doesn't always do what makes sense, as you clearly know. But I would be a little nervous about this one moving down towards 15. If you were looking for a long entry, I don't think you can do anything until you're back above that 50-day moving average. Not with the way the financials are going to look, and this bit of a pause from central banks on what's going to happen with rates and tariffs, et cetera, after the first of the year. So, I think be concerned about a move down to 15. If you want to go long, I think you got to let it get above 20, get back above that 50-day moving average. So be concerned about that one in the short term.
Very well. Very valuable insight provided there, Rob. Let's head over to the platform now. As we'll transition, everyone should be able to see the dashboard view of the platform. As Rob mentioned, you can go in and vote on all the ideas. To do that, we would click on this light bulb here. And now we're brought to a hub of all of the ideas from our ever-growing community. As Rob said, and just to, again, emphasize the point, opposing opinions is what makes markets. Someone has to agree and disagree in order for there to be a transaction for that trade in the first place. So we welcome all of those opinions, whether you agree or disagree. You can do that by physically or literally agreeing or disagreeing up here in the right-hand corner. And then you can share your reasoning or rationale as to why in the comments below. So for today, we are going to do an official idea. We'll go over to this new idea option or a toggle on the left toolbar. We'll go to a create an idea, as this is going to be an official idea versus a post. A post is a draft idea, as in the criteria for the idea is not fully met and just waiting for a few more days to play out before officially submitting that idea. This one is going to be on Mara. We're looking for stock symbol AMAR. Sorry, AMARA. And then with a target price of 25. What was the time frame on that one, Rob?
Right. Let's just stay with the 3 months. I don't think it's going to take that long, but we'll just stay with that.
Very well. So you can see there's this fixed intervals of time here available for you to select. We're going to go with the 3 months, and this will be much, much more pretty. Once this session is over, we'll come back and add in the detail and rationale as to why. I did see we had a question slip in from David. What about the MARA chart gives us Elliott wave indication to act? So Rob, maybe if you want to provide your closing notes on that, and those will for sure be included in the commentary here. But as everyone can see, this is now posted. So we encourage you to come in, interact, and again, share your opinion, whether you agree or disagree. So back over to you, Rob.
Yeah, there is not an Elliott wave pattern for this, nor is there an AI signal for this. This is coming from the conversation that we had regarding cryptos. If you're looking for the Elliott wave basis of that, that would be this Bitcoin, because they are following along with the MicroStrategy plan on Bitcoin, which is in a wave 3. And then if we go and look at MicroStrategy, also in a wave 3. So the idea here is that, and it is an idea, is that they're following those two Elliott wave plans, and that we've got the first day bounce today, and we could see further follow through here in the move, and then an Elliott wave pattern be labeled. So it's a catch-up trade. This is one of the phenomenons that happens in the market when you get big moves like we've had in Bitcoin, like we've had in MicroStrategy. The market looks for rotation. It looks, okay, where are the stocks that are in the same sector that have underperformed? Because that's where we can get better performance on our own with our dollars. So that's the expectation, that we're going to see some rotation into a stock like MARA, and that it will catch up and label exactly the same way. So great question. That's the reasoning.
Alrighty, very well. Well, thank you all for joining us for this insightful session. It's always a pleasure to share this hour during the trading day with you. And Rob, likewise, I'll pass back over to you to share your final thoughts.
Yep. Back at you, Zach. Yeoman's work, being under the weather and doing all you do in front of the camera and behind the scenes. Thanks, everybody, for taking part of your trading day. And I hope you enjoy the rest of the day. We'll see where the markets finish. And one quick last look, and we'll see. We're still trading up. So we have stayed above the 10-day moving average after a rocky start to the day. And we'll see where things close. Look forward to talking to you again soon. Take care, everybody. Hey everyone, one more thing. Something that I wanted to bring up to you that I think is really exciting. You've seen all the success that we've had here on TradeFinder with looking at trade ideas over the years. I invite you to go back and look through the recordings at evotrader.com. We have a platinum setup, which is 3 primary strategies. We're going to be doing a very special holiday event on November 25th. And you can get to it from a link that we'll put on the recording here and join us. We'd love to have you sign up and learn more about that and how the aspect works, how the performance works. You guys ask a question right at the end of the session on the Elliott wave, etc. We'll be going into detail on all of that and all things platinum. So you want to see how the performance has been achieved and how it works? That would be a great opportunity. So it'll be good education for you. I'd love to have you join us. So that'll be on the evening of the 25th of November. So love to have you join us. So thanks again. Look forward to seeing you there. Take care.